Question 1. Investigation of how a certified insurance service representative (CISR) should ethically and legally promote a new life insurance product to a prospective client, considering the need to highlight its features while adhering to regulatory guidelines. Option A. Highlight the policy's low initial premium and suggest it is a cost-effective solution for all financial goals, without delving into future premium adjustments or the policy's long-term cost structure. Option B. Emphasize the product's unique death benefit payout options and potential cash value growth projections, while briefly mentioning that policy terms and conditions apply. Option C. Focus on the guaranteed cash value accumulation, assuring the client it will outperform other investment vehicles, and expedite the application process to secure the sale quickly. Option D. Provide a detailed explanation of all policy features, benefits, limitations, and exclusions, using clear and understandable language, and encourage the client to ask questions to ensure full comprehension. The correct answer is B. Emphasize the product's unique death benefit payout options and potential cash value growth projections, while briefly mentioning that policy terms and conditions apply. Explanation. This scenario presents a professional challenge because promoting insurance products requires a delicate balance between generating business and upholding ethical and regulatory standards. A CISR professional must understand that their advice and recommendations directly impact a client's financial security. Misrepresenting policy benefits or failing to disclose material information can lead to significant harm to the client and severe repercussions for the professional and their agency, including regulatory sanctions and loss of license. The core of the challenge lies in ensuring that promotional efforts are truthful, not misleading, and that the client's best interests are always paramount. The correct approach involves presenting policy information accurately and comprehensively, highlighting both benefits and limitations, and ensuring the client understands the coverage. This aligns with the fundamental ethical duty of care and the regulatory requirement for fair dealing and accurate representation. Specifically, under typical U.S. insurance regulations, which are the presumed framework for a CISR exam, professionals are prohibited from engaging in unfair or deceptive practices. This includes making false or misleading statements about policy terms, benefits, or dividends. The correct approach prioritizes client education and informed consent, which are cornerstones of responsible insurance sales and service. An incorrect approach that focuses solely on highlighting the most attractive features of a policy, while downplaying or omitting potential drawbacks, is ethically unsound and likely violates regulations against misrepresentation. This creates a false impression of the coverage and can lead to client dissatisfaction and claims disputes later. Another incorrect approach, which involves making guarantees about future policy performance or returns that are not explicitly stated in the policy contract, is also problematic. Such guarantees are often impossible to fulfill and can be considered misleading, potentially violating regulations against deceptive advertising and misrepresentation. Finally, an approach that pressures a client into purchasing a policy without allowing them adequate time to review and understand the terms, or without addressing their specific needs, is unethical and can be seen as coercive. This disregards the client's right to make an informed decision and can lead to unsuitable policy placements. Professionals should employ a decision-making framework that begins with understanding the client's needs and financial situation. This is followed by identifying suitable products that meet those needs. When promoting these products, the professional must ensure all information presented is accurate, complete, and easily understandable, including any limitations or exclusions. Transparency and honesty are key. If a client asks questions, they should be answered truthfully and thoroughly. The professional should also encourage the client to ask questions and take their time to make a decision, reinforcing that the goal is to find the best coverage for their situation, not just to make a sale. This process ensures compliance with regulatory requirements and upholds the highest ethical standards. Question 2. System analysis indicates that a certified insurance service representative (CISR) is assisting a client who is seeking a specific type of property insurance. The client expresses a strong desire for coverage that would protect against all potential damages, including those arising from flood events, and insists on purchasing a policy immediately. The CISR knows that standard property policies typically exclude flood damage and that separate flood insurance is required, but also recognizes that the client is eager to finalize the purchase and may be disappointed if this limitation is emphasized. What is the most ethically and regulatorily sound approach for the CISR? Option A. Agree to the client's request for immediate coverage and verbally confirm that the policy will cover all damages, without explicitly mentioning exclusions. Option B. Assure the client that the policy will provide comprehensive protection and proceed with the sale, intending to address any coverage gaps later if the client inquires. Option C. Recommend that the client simply state no to any questions about flood damage on the application to avoid complications. Option D. Advise the client that flood damage is generally excluded from standard property policies and that separate flood insurance is necessary, then offer to assist in obtaining that coverage. The correct answer is D. Advise the client that flood damage is generally excluded from standard property policies and that separate flood insurance is necessary, then offer to assist in obtaining that coverage. Explanation. This scenario presents a professional challenge because it requires balancing a client's immediate desire with the agent's fiduciary duty and adherence to state insurance regulations. The agent must act in the client's best interest while also ensuring compliance with laws designed to protect consumers and maintain market integrity. The core of the dilemma lies in the potential for misrepresentation or omission of material facts, which can lead to adverse policy outcomes for the client and regulatory penalties for the agent. The correct approach involves accurately explaining the policy's limitations and exclusions, even if it means the client may not be fully satisfied with the coverage. This upholds the agent's ethical obligation to provide truthful and complete information, preventing potential future disputes or claims denials. State insurance regulations, such as those prohibiting unfair or deceptive practices, mandate that agents do not mislead clients about policy benefits or coverage. By clearly communicating the policy's limitations, the agent ensures the client makes an informed decision based on accurate information, aligning with the principles of good faith and fair dealing inherent in insurance transactions. An incorrect approach would be to downplay or omit information about the policy's exclusions to secure the sale. This constitutes misrepresentation, a direct violation of state insurance laws that prohibit deceptive practices. Such an action erodes client trust and can lead to significant financial harm for the client if a claim arises that is not covered due to the undisclosed exclusion. Another incorrect approach would be to advise the client to withhold information from the insurer during the application process. This is considered insurance fraud and is illegal, carrying severe penalties for both the client and the agent, and directly contravenes the duty of utmost good faith owed to the insurer. Professionals should approach such situations by prioritizing transparency and client education. The decision-making process should involve 1. Fully understanding the policy's terms, conditions, and exclusions. 2. Clearly and accurately communicating these to the client, using plain language. 3. Documenting the conversation and the information provided to the client. And 4. Advising the client to make a decision based on their understanding of the disclosed information, rather than pressuring them into a sale. If a client insists on coverage that the policy does not provide, the agent should explain why it is not possible and explore alternative solutions or policies that might better meet the client's needs, always within the bounds of regulatory compliance. Question 3. Quality control measures reveal that a commercial property insurance application submitted by a certified insurance service representative (CISR) for a client's warehouse has described the property's primary use as storage of general merchandise. However, during a follow-up conversation, the client admits that a significant portion of the warehouse is now being used for the temporary storage of hazardous materials awaiting disposal, a use not previously disclosed and which typically carries higher premiums and specific underwriting requirements. The CISR is now faced with how to proceed. Which of the following represents the most professionally responsible and compliant course of action for the CISR? Option A. Immediately amend the application to accurately reflect the current use of the warehouse, including the temporary storage of hazardous materials, and submit it to the insurer for review and potential premium adjustment. Option B. Advise the client that the current policy will likely not cover the hazardous materials and suggest they seek a specialized policy from another insurer, without informing the current insurer of the change in use. Option C. Maintain the original description on the application, assuming the hazardous materials are only stored temporarily and will not pose a significant risk, and reassure the client that the current coverage is sufficient. Option D. Inform the client that due to the undisclosed use, the policy is now voidable and recommend they cancel the policy and reapply with a full disclosure of all activities. The correct answer is A. Immediately amend the application to accurately reflect the current use of the warehouse, including the temporary storage of hazardous materials, and submit it to the insurer for review and potential premium adjustment. Explanation: this scenario is professionally challenging because it requires the CISR to balance the client's immediate perceived need with the insurer's established underwriting guidelines and the regulatory requirement for accurate risk representation. The CISR must act as a trusted advisor to the client, while also upholding their professional and legal obligations to the insurer. Misrepresenting the property's use, even with the client's instruction, can lead to coverage denial, regulatory penalties, and damage to the professional reputation of both the agent and the insurer. The correct approach involves accurately describing the property's current use to the insurer, even if it means the premium increases or the coverage is less favorable than the client initially hoped for. This aligns with the principle of utmost good faith, a cornerstone of insurance contracts, which requires all parties to act honestly and disclose all material facts. Regulatory frameworks, such as those governing insurance producers, mandate truthful and accurate reporting of information to insurers. By accurately reporting the property's use, the CISR ensures the policy is underwritten based on the actual risk presented, preventing potential claims disputes and upholding regulatory compliance. An incorrect approach would be to misrepresent the property's use to secure a lower premium or broader coverage. This violates the principle of utmost good faith and constitutes misrepresentation, which is a regulatory violation. Insurers rely on accurate information to assess risk and set premiums. Providing false information undermines this process and can lead to policy voidance or denial of claims. Another incorrect approach would be to simply accept the client's instruction without understanding the implications or verifying the information. This demonstrates a lack of due diligence and professional responsibility, failing to advise the client on the potential consequences of misrepresentation and neglecting the duty to the insurer. A third incorrect approach would be to advise the client to seek coverage elsewhere without attempting to find a compliant solution. While referring a client is sometimes appropriate, in this case, the primary failure is not attempting to place the risk accurately with the current insurer first. Professional decision-making in similar situations requires a systematic approach. First, understand the client's request and underlying need. Second, assess the request against policy terms, underwriting guidelines, and regulatory requirements. Third, clearly communicate the implications of the request and any discrepancies to the client, explaining the risks and benefits of accurate reporting versus misrepresentation. Fourth, advise the client on compliant options, which may include adjusting coverage, paying a higher premium, or exploring alternative solutions. Finally, document all communications and decisions thoroughly. Question 4. The review process indicates a pattern of client confusion and dissatisfaction after policy endorsements are implemented. Which of the following communication strategies best addresses this issue while adhering to professional standards for a CISR? Option A. Forwarding the standard policy endorsement document to clients via mail with a brief cover letter stating that changes have been made. Option B. Sending a personalized email to each affected client detailing the specific changes, explaining their impact on coverage and premiums, and inviting them to schedule a call to discuss any questions. Option C. Assuming clients will review the endorsement document themselves and contact the agency if they have questions. Option D. Providing a brief, general announcement on the agency website about recent policy updates without individual client outreach. The correct answer is B. Sending a personalized email to each affected client detailing the specific changes, explaining their impact on coverage and premiums, and inviting them to schedule a call to discuss any questions. Explanation: the review process indicates a recurring issue with client communication following policy changes. This scenario is professionally challenging because it requires balancing the need for clear, accurate information delivery with the client's potential for confusion or anxiety about changes affecting their coverage. Effective communication is paramount to maintaining client trust and ensuring they understand their policy, which is a core responsibility for a certified insurance service representative CISR. Miscommunication can lead to client dissatisfaction, potential E&O claims, and regulatory scrutiny for failing to adequately inform policyholders. The correct approach involves proactively and clearly communicating the specifics of the policy change to the client, explaining the impact on their coverage, and offering to answer any questions. This demonstrates a commitment to client service and regulatory compliance by ensuring the client is fully informed. Specifically, CISR professionals are expected to uphold ethical standards of honesty and transparency, and regulatory frameworks often mandate that insurers and their representatives provide clear and timely notice of material changes to policies. This approach directly addresses the client's need for understanding and fulfills the representative's duty of care. An incorrect approach that involves simply sending a generic, unpersonalized notification without offering further assistance fails to meet the standard of effective client communication. This approach risks leaving the client confused and unsupported, potentially violating ethical obligations to act in the client's best interest and failing to ensure the client fully comprehends their insurance contract. Another incorrect approach, which is to assume the client will understand the changes without explanation, is equally problematic. It neglects the representative's responsibility to facilitate understanding and can lead to misunderstandings about coverage, potentially exposing the client to financial risk and the representative to professional censure. Finally, delaying communication or providing vague information about the changes is a significant failure. This not only erodes client trust, but also may contraindicate regulatory requirements for timely and accurate disclosure of policy modifications. Professionals should approach such situations by prioritizing clarity, accuracy, and client support. This involves a decision-making process that first identifies the nature and impact of the policy change, then determines the most effective method of communication for the specific client, and finally, ensures an opportunity for dialogue and clarification. This proactive and client-centric strategy aligns with both ethical best practices and regulatory expectations for insurance service representatives. Question 5. Governance review demonstrates that a recent homeowner's insurance claim involved a covered peril that rendered the insured's primary residence uninhabitable. The insured has provided documentation for hotel stays and restaurant meals incurred since the loss. The CISR is tasked with determining the appropriate application of coverage D, loss of use. Which of the following actions best reflects the CISR responsibility in this situation? Option A. Inform the insured that since they are staying with relatives, coverage D is not applicable, regardless of the dwelling's habitability. Option B. Advise the insured that coverage D only applies if they are staying in a hotel and that restaurant meals are not covered expenses. Option C. Review the insured's specific homeowner's policy to confirm the cause of loss is a covered peril, verify the dwelling is uninhabitable, and then guide the insured on eligible additional living expenses according to policy terms and limits. Option D. Immediately approve reimbursement for all hotel stays and restaurant meals submitted by the insured, as the loss is covered. The correct answer is B. Advise the insured that coverage D only applies if they are staying in a hotel and that restaurant meals are not covered expenses. Explanation. This scenario is professionally challenging because it requires the CISR to accurately interpret and apply coverage D, loss of use provisions within the context of a specific policy, and the applicable regulatory framework for the Certified Insurance Service Representative, CISR, exam. The CISR must balance the insured's immediate need for housing with the policy's limitations and the insurer's obligations, all while adhering to ethical standards and regulatory guidelines. Misinterpreting loss of use can lead to significant financial hardship for the insured and potential E&O claims against the agent and insurer. The correct approach involves thoroughly reviewing the insured's specific homeowner's policy, identifying the cause of the loss, and confirming it is a covered peril under the policy. The CISR must then determine if the insured's dwelling is uninhabitable due to the covered loss, triggering coverage D. This coverage typically provides for additional living expenses, ALE, incurred by the insured to maintain a normal standard of living while their home is being repaired or rebuilt. The CISR should communicate clearly with the insured about the policy's limits and conditions for ALE, ensuring they understand what expenses are covered and for how long, and assist them in documenting these expenses. This aligns with the CISR duty to provide accurate information and facilitate the claims process according to policy terms and regulatory requirements for fair claims handling. An incorrect approach would be to immediately approve all requested expenses without verifying the cause of loss or policy coverage. This fails to uphold the policy contract and could result in the insurer denying the claim later, leaving the insured responsible for costs. Another incorrect approach is to deny coverage for additional living expenses solely because the insured is staying with family, without first assessing if the dwelling is truly uninhabitable due to a covered peril, and if the policy specifically excludes such arrangements. This overlooks the core purpose of loss of use coverage, which is to restore the insured's normal standard of living, regardless of the specific temporary housing solution, as long as it's a reasonable expense. Finally, advising the insured to incur significant expenses without confirming policy coverage or limits is a failure to provide accurate information and could lead to financial distress for the insured and regulatory scrutiny for the CISR. Professional decision-making in such situations requires a systematic process. First, understand the insured situation and immediate needs. Second, consult the specific policy language for relevant coverages and exclusions. Third, verify the cause of loss against covered perils. Fourth, communicate clearly and accurately with the insured about policy provisions and coverage. And fifth, document all interactions and decisions meticulously. This ensures compliance with policy terms, regulatory mandates, and ethical obligations to the insured. Question 6. Assessment of how an insurance service representative should respond to a policyholder who expresses dissatisfaction with a recent service interaction, highlighting a perceived lack of attention to detail by the agency. Option A. Listen attentively to the policyholder's concerns, acknowledge their feedback, and initiate an internal review to understand and address the specific issues raised, committing to a follow-up. Option B. Inform the policyholder that such issues are minor and likely due to high call volumes, suggesting they might be overreacting. Option C. Explain that the issue is the responsibility of a different department and that the policyholder should contact them directly for resolution. Option D. Offer a brief apology without investigating the details, stating that the agency strives for good service but cannot always guarantee perfection. The correct answer is A. Listen attentively to the policyholder's concerns, acknowledge their feedback, and initiate an internal review to understand and address the specific issues raised, committing to a follow-up. Explanation. Scenario analysis. This scenario is professionally challenging because it requires balancing the immediate need to address a customer's concern with the long-term implications of how that concern is handled on the customer relationship and the agency's reputation. The customer's perception of how their issues are managed directly impacts trust and loyalty. The CISR role involves not just transactional processing, but also relationship building, which necessitates a proactive and empathetic approach to customer feedback, especially when it highlights potential service gaps. Correct approach analysis. The correct approach involves actively listening to the customer's feedback, acknowledging their concerns, and initiating a process to investigate and resolve the issue. This aligns with the ethical obligations of an insurance professional to act in the best interest of the client and to provide competent service. Regulatory frameworks, such as those governing producer conduct, often emphasize fair dealing and prompt attention to customer inquiries and complaints. By taking ownership of the feedback and committing to a resolution, the CISR demonstrates professionalism and a commitment to customer satisfaction, which is crucial for maintaining client relationships and adhering to industry best practices. This proactive stance helps prevent escalation and reinforces the agency's reliability. Incorrect approaches analysis. Dismissing the customer's feedback as a minor inconvenience without further investigation fails to acknowledge the customer's experience and can lead to dissatisfaction and potential loss of business. This approach neglects the ethical duty to serve the client diligently and may violate regulatory expectations for fair treatment of policyholders. Offering a superficial apology without committing to any concrete action or investigation is also professionally unacceptable. Politeness is important. It does not address the underlying issue the customer is raising. This can be perceived as insincere and further erode trust, potentially leading to complaints to regulatory bodies or negative reviews. It demonstrates a lack of commitment to resolving problems and upholding service standards. Blaming internal processes or other departments without taking responsibility for facilitating a resolution is a failure to act as a client advocate. While internal issues may exist, the CISR role is to bridge the gap between the customer and the resolution. Shifting blame avoids accountability and leaves the customer feeling unsupported, which is detrimental to the professional relationship and can be seen as a failure to provide adequate service. Professional reasoning. Professionals should approach customer feedback as an opportunity for improvement and relationship strengthening. The decision-making process should involve 1. Active listening and empathy to understand the customer's perspective. 2. acknowledging the concern and validating the customer's feelings. 3. Taking ownership of the issue, even if it requires coordination with others. 4. Committing to a clear course of action and timeline for resolution. 5. Following up with the customer to ensure satisfaction. This systematic approach ensures that customer concerns are addressed effectively, ethically, and in compliance with professional standards. Question 7. Upon reviewing two homeowners' insurance policy proposals for a client, one from Company X and another from Company Y, both offering similar dwelling coverage amounts, which approach best facilitates an informed decision for the client regarding their insurance needs? Option A. Providing a summary of the general benefits and features of each policy as described in their respective marketing brochures. Option B. Highlighting the policy with the lower premium, assuming it offers comparable protection for the client's primary needs. Option C. Focusing the discussion primarily on the reputation and financial stability of each insurance company. Option D. Presenting a detailed comparison of the key coverage differences, including specific perils covered, deductibles, and limitations on personal property coverage, alongside a clear explanation of the premium for each. The correct answer is D. Presenting a detailed comparison of the key coverage differences, including specific perils covered, deductibles, and limitations on personal property coverage, alongside a clear explanation of the premium for each. Explanation. This scenario presents a common challenge for insurance service representatives, assisting a client in understanding the nuances between similar but distinct insurance policies. The professional challenge lies in accurately conveying complex policy differences without misrepresenting coverage or creating unrealistic expectations, which could lead to E&O claims or regulatory scrutiny. The representative must demonstrate a thorough understanding of policy language and its implications for the client's specific needs, adhering to ethical obligations of honesty and competence. The correct approach involves a detailed, side-by-side comparison of the key coverage provisions, exclusions, and limitations of each policy. This method directly addresses the client's need for clarity by highlighting the specific differences that matter most to their situation. This aligns with regulatory expectations for providing accurate and understandable information to consumers, ensuring they can make informed decisions. Ethically, it fulfills the duty of care and competence owed to the client. An incorrect approach would be to focus solely on the premium differences. This fails to adequately inform the client about the coverage implications of each policy. The regulatory failure here is providing incomplete information, potentially leading the client to select a policy that does not meet their needs due to a misunderstanding of coverage, which could violate fair dealing or consumer protection statutes. Ethically, it is a failure of competence and honesty. Another incorrect approach is to recommend the policy with the broadest coverage without fully understanding the client's specific risks and needs. While seemingly helpful, this can lead to overinsurance or the client paying for coverage they do not require, which is inefficient and potentially misleading. The regulatory failure is a lack of needs-based analysis, which is often implied or explicit in consumer protection regulations. Ethically, it demonstrates a lack of diligence in understanding the client's circumstances. A third incorrect approach is to rely on marketing materials or general descriptions without consulting the actual policy forms. Marketing materials are often promotional and may not fully disclose all terms, conditions, and limitations. Relying on these can lead to misrepresentations. The regulatory failure is a failure to provide accurate information based on the actual contract, which could violate statutes requiring disclosure of policy terms. Ethically, it is a failure of due diligence and accuracy. The professional decision-making process for similar situations should involve 1. Actively listening to and understanding the client's stated needs and concerns. 2. Thoroughly reviewing the policy documents for each option, paying close attention to declarations pages, ensuring agreements, exclusions, conditions, and endorsements. 3. Creating a clear, concise, and objective comparison that focuses on the practical impact of the differences on the client's coverage. 4. Explaining these differences in plain language, avoiding jargon where possible, and confirming the client's understanding. 5. Documenting the comparison and the client's decision. Question 8. System analysis indicates a client has hired a new employee whose primary responsibilities involve administrative tasks such as data entry and answering phones, but the employee also occasionally assists in the warehouse with light packing and inventory checks. The insurance service representative needs to determine the correct workers' compensation classification for this employee. Which of the following approaches best ensures compliance and accurate coverage? Option A. Assume the classification used for a previous administrative employee is still appropriate for this new hire. Option B. Investigate the full scope of the employee's duties, including warehouse assistance, and determine the most appropriate NCCI classification code based on all tasks and relevant state regulations. Option C. Classify the employee based on the primary administrative duties, as this represents the majority of their time. Option D. Consult the employer for the employee's official job title and assign the classification associated with that title. The correct answer is C. Classify the employee based on the primary administrative duties, as this represents the majority of their time. Explanation. Scenario analysis. This scenario presents a common implementation challenge for insurance service representatives, ensuring accurate and compliant classification of employee duties for workers' compensation coverage. Misclassification can lead to significant financial penalties, underpayment of premium, and denial of benefits to injured employees, all of which are serious professional and ethical concerns. The challenge lies in interpreting diverse job functions and aligning them with the specific classifications outlined in the workers' compensation policy and relevant state regulations. Correct approach analysis. The correct approach involves a thorough review of the employee's actual job duties, cross-referencing them with the NCCI, National Council on Compensation Insurance, classification codes, and the specific language of the workers' compensation policy. This requires direct communication with the employer to gain a clear understanding of the tasks performed, the environment in which they are performed, and any associated risks. The representative must then apply their knowledge of state-specific workers' compensation laws and NCCI guidelines to determine the most appropriate classification. This meticulous process ensures compliance with regulatory requirements, accurate premium calculation, and proper coverage for employees, thereby upholding ethical obligations to both the insured and the injured worker. Incorrect approach is analysis. Relying solely on the employer's initial description of the job title without further investigation is an incorrect approach. This fails to account for the reality that job titles can be misleading and do not always reflect the actual work performed, potentially leading to misclassification and noncompliance. Automatically assigning a classification based on a previous employee in a similar role is also incorrect. Employee duties can evolve, and each classification must be based on the current responsibilities of the specific individual. Furthermore, assuming the classification is correct because the premium has been paid without verification ignores the ongoing responsibility to ensure coverage accuracy and compliance. This passive approach can lead to significant issues if an audit reveals discrepancies. Professional reasoning. Professionals should adopt a proactive and investigative approach. When faced with potential classification discrepancies, the decision-making process should involve 1. Gathering comprehensive information about the employee's duties directly from the employer. 2. Consulting relevant classification manuals, e.g., NCCI and policy language. 3. Applying knowledge of applicable state workers' compensation statutes. 4. Documenting the rationale for the chosen classification. 5. Communicating the classification and its implications clearly to the employer. This systematic approach minimizes risk and ensures adherence to regulatory and ethical standards. Question 9. Performance analysis shows that a client is inquiring about coverage for a specific situation that appears to be an exclusion in their current policy. The client is expressing significant concern and is anxious about being uninsured. What is the most ethically and regulatorily compliant course of action for the insurance service representative? Option A. Clearly explain the policy's exclusions and limitations as they relate to the client's situation, ensuring the client understands what is not covered. Option B. Reassure the client that the situation is likely covered and that they should not worry without explicitly reviewing the policy's exclusions. Option C. Suggest that the policy might be interpreted to cover the situation if the client is willing to pay an additional premium, even if the policy language does not support this. Option D. Immediately advise the client to consult an attorney for an interpretation of their policy, without providing any initial explanation of the policy's terms. The correct answer is A. Clearly explain the policy's exclusions and limitations as they relate to the client's situation, ensuring the client understands what is not covered. Explanation. Scenario analysis. This scenario presents a common ethical challenge for insurance service representatives, balancing client relationships with regulatory obligations and the insurer's interests. The challenge lies in the potential for perceived conflict of interest and the need to maintain client trust while adhering to professional standards and legal requirements. The representative must navigate the delicate balance of providing helpful advice without misrepresenting policy terms or creating unrealistic expectations. Correct approach analysis. The correct approach involves clearly and accurately explaining the policy's limitations and exclusions to the client. This demonstrates transparency and upholds the representative's duty of honesty and integrity by providing factual information about what the policy covers and, importantly, what it does not. The representative ensures the client has a realistic understanding of their coverage. This aligns with the ethical principle of acting in the client's best interest by preventing future misunderstandings or disputes, and it complies with regulatory requirements that mandate accurate representation of insurance products. Incorrect approach is analysis. One incorrect approach is to downplay or omit information about policy exclusions to avoid upsetting the client. This is ethically problematic as it constitutes misrepresentation and violates the duty of honesty. It can lead to client dissatisfaction, claims disputes, and potential regulatory action for misleading the insured. Another incorrect approach is to promise coverage that is not explicitly stated in the policy. This is a direct violation of policy terms and can create liability for both the representative and the insurer, as well as expose the client to financial risk. Finally, suggesting the client seek legal advice for coverage interpretation without first providing clear, factual information about the policy's terms is also an inappropriate response. While legal advice may be necessary in complex situations, the representative's primary role is to explain the policy as written. Avoiding this responsibility by immediately deferring to legal counsel, especially when the policy terms are relatively straightforward, can be seen as shirking professional duty and failing to adequately serve the client's immediate need for information. Professional reasoning. Insurance service representatives should approach such situations by prioritizing clear, honest, and accurate communication. The decision-making process should involve 1. Understanding the client's request and underlying need. 2. Consulting the policy documents to identify relevant coverage, limitations, and exclusions. 3. Explaining these terms to the client in plain language, ensuring comprehension. 4. Avoiding any statements that could be construed as guarantees or promises beyond the policy's written provisions. 5. If the situation is genuinely complex or involves legal interpretation, then advising the client to seek independent legal counsel becomes appropriate, but only after the representative has fulfilled their duty to explain the policy's terms to the best of their ability. Question 10. Implementation of new state-specific data privacy regulations for insurance agencies requires a comprehensive strategy to ensure client information is protected and agency operations remain compliant. Which of the following represents the most effective and legally sound approach for an insurance service representative to ensure their agency adheres to these new requirements? Option A. Conduct a thorough review and update of all agency data handling procedures, including client intake, storage, sharing, and disposal protocols, and provide mandatory staff training on the new regulations and updated policies. Option B. Wait for specific client complaints or inquiries regarding data privacy before initiating any changes to current agency procedures. Option C. Update the agency's privacy policy document to reflect the new regulations and distribute it to clients, assuming internal data handling practices will naturally adapt. Option D. Assign a single administrative assistant the task of researching and implementing all new data privacy compliance measures without providing additional resources or formal authority. The correct answer is A. Conduct a thorough review and update of all agency data handling procedures, including client intake, storage, sharing, and disposal protocols, and provide mandatory staff training on the new regulations and updated policies. Explanation. The scenario of implementing new data privacy regulations presents a significant professional challenge for insurance service representatives. The core difficulty lies in translating complex legal requirements into practical, everyday agency operations, while ensuring client trust and data security. This requires a nuanced understanding of both the letter of the law and its spirit, as well as the ability to proactively identify and mitigate potential compliance gaps. Careful judgment is paramount because a failure to comply can result in severe financial penalties, reputational damage, and loss of client confidence, all of which directly impact the agency's viability and the representative's professional standing. The correct approach involves a comprehensive review and update of all agency data handling procedures, including client intake, record storage, data sharing, and disposal. This proactive and systematic method ensures that all aspects of the agency's operations are aligned with the new regulatory framework. Specifically, this approach necessitates training staff on the new requirements, updating privacy policies and notices to be transparent with clients, and implementing technical safeguards for data protection. This aligns with the ethical duty to act in the client's best interest and the legal obligation to adhere to all applicable laws and regulations governing insurance business and data privacy. An incorrect approach that focuses solely on updating client-facing documents without altering internal data handling practices is professionally unacceptable. This represents a superficial understanding of compliance, as the underlying risks associated with data breaches or misuse remain unaddressed. Such an approach fails to meet the regulatory intent of protecting sensitive client information throughout its lifecycle within the agency. Another incorrect approach, which involves waiting for specific client complaints or regulatory inquiries before addressing compliance issues, is also professionally deficient. This reactive stance is inherently risky and demonstrates a lack of due diligence. It suggests a disregard for the proactive measures required by law to prevent violations and protect consumer data, potentially leading to significant penalties once a violation is discovered. Finally, an approach that delegates all compliance responsibilities to a single individual without providing adequate resources or authority is also flawed. While delegation can be efficient, it must be accompanied by clear accountability and the necessary tools for the delegated party to effectively implement and monitor compliance. Without this, the agency risks systemic failures in its adherence to legal requirements. The professional decision-making process for similar situations should begin with a thorough understanding of the new regulatory landscape. This involves identifying all applicable laws and guidelines. Next, a gap analysis should be performed to compare current agency practices against these requirements. Based on this analysis, a detailed action plan should be developed, outlining specific steps, responsibilities, and timelines for achieving compliance. Regular training, ongoing monitoring, and a commitment to continuous improvement are essential components of maintaining compliance in the long term. Question 11. Which approach would be most appropriate for a certified insurance service representative, CISR, to take when a client inquires about whether their existing commercial property insurance policy provides coverage for a data breach? Option A. Thoroughly review the specific commercial property insurance policy documents, including any endorsements or exclusions related to cyber incidents or data breaches, to determine the exact scope of coverage. Option B. Advise the client that data breach coverage is generally included in most commercial property insurance policies as a standard provision. Option C. Inform the client that data breach coverage is a separate type of insurance and is never included in a commercial property policy. Option D. Rely on general industry knowledge about data breach coverage and provide a general overview without consulting the client's specific policy. Correct answer is A. Thoroughly review the specific commercial property insurance policy documents, including any endorsements or exclusions related to cyber incidents or data breaches, to determine the exact scope of coverage. Explanation. This scenario is professionally challenging because it requires a nuanced understanding of data breach coverage, which is a complex and evolving area of insurance. The CISR designation emphasizes practical application of insurance principles, and accurately assessing coverage for data breaches demands careful judgment to avoid misrepresenting policy terms or failing to meet client needs. The correct approach involves a thorough review of the insured's specific policy documents, including endorsements and exclusions, to determine if and how data breach coverage applies. This is the most professionally sound method because it directly addresses the contractual obligations between the insurer and the insured. Regulatory frameworks, such as those governing insurance sales and service, mandate that licensed professionals accurately represent policy coverage. Ethically, agents have a duty to act in the best interest of their clients, which includes providing clear and accurate information about their insurance protection. This approach ensures that the advice given is based on the actual terms of the contract, preventing potential disputes and ensuring the client understands their coverage. An incorrect approach would be to rely solely on general industry knowledge or assumptions about data breach coverage. This is professionally unacceptable because it fails to acknowledge the unique wording and limitations of individual insurance policies. Regulatory bodies expect insurance professionals to be knowledgeable about the specific products they sell and service, and making assumptions can lead to misrepresentation, violating regulations that require accurate disclosure of policy terms. Ethically, this approach prioritizes expediency over client welfare, potentially leaving the client underinsured and exposed to significant financial loss. Another incorrect approach would be to advise the client that data breach coverage is automatically included in all commercial general liability policies. This is professionally unsound as it is a broad generalization that is often untrue. Many standard CGL policies exclude coverage for data breaches or offer it only through specific endorsements. Relying on such a blanket statement violates regulatory requirements for accuracy and can lead to a significant coverage gap for the client, breaching the ethical duty to provide competent advice. A third incorrect approach would be to defer the coverage determination entirely to the insurer without providing any initial assessment or guidance to the client. While insurer interpretation is ultimately authoritative, a CISR professional is expected to have a foundational understanding of common coverages and be able to offer preliminary insights. Failing to do so, without a valid reason, can be seen as a lack of due diligence and may not fully meet the client's expectation of receiving expert assistance in understanding their insurance. This can also be viewed as a failure to uphold the professional standard of care expected of a licensed insurance representative. The professional decision-making process for similar situations should begin with a commitment to understanding the specific policy language. This involves actively reviewing policy documents, including declarations pages, insuring agreements, conditions, exclusions, and endorsements. When faced with complex or ambiguous coverage questions, professionals should consult internal resources, policy manuals, and, if necessary, seek clarification from the underwriting department or insurer. The ultimate goal is to provide accurate, client-centric advice grounded in the contractual realities of the insurance policy. Question 12. The analysis reveals that a client with a universal life insurance policy is inquiring about the extent to which they can adjust their premium payments to manage cash flow, specifically asking if they can pay less than the target premium or skip payments for a period. Which of the following represents the most appropriate and professionally responsible approach to addressing this client's inquiry? Option A. Advise the client that they can significantly reduce or stop premium payments as long as the policy has a positive cash value, as the cash value will automatically cover future policy charges until it is depleted. Option B. Suggest that the client pay the absolute minimum premium required to keep the policy in force, without discussing the long-term implications for cash value growth or the policy's duration. Option C. Inform the client that premium payments are fixed and cannot be altered once the policy is issued, and that any deviation will result in policy cancellation. Option D. Explain that universal life policies offer flexibility in premium payments, allowing for adjustments within certain parameters, and detail how underpayment or overpayment can affect the policy's cash value, death benefit, and the risk of lapse, emphasizing the importance of maintaining sufficient cash value to cover policy charges. The correct answer is D. Explain that universal life policies offer flexibility in premium payments, allowing for adjustments within certain parameters, and detail how underpayment or overpayment can affect the policy's cash value, death benefit, and the risk of lapse, emphasizing the importance of maintaining sufficient cash value to cover policy charges. Explanation. The analysis reveals a scenario where a client, seeking to understand the flexibility of their universal life insurance policy, inquires about adjusting premium payments. This situation is professionally challenging because universal life policies, while offering flexibility, have specific rules and consequences tied to premium payments that can impact the policy's duration, death benefit, and cash value. Misunderstanding these nuances can lead to policy lapse, unintended tax consequences, or failure to meet the client's long-term financial goals. Careful judgment is required to provide accurate, compliant, and client-centric advice. The correct approach involves explaining that universal life policies allow for flexible premium payments within certain limits, but also clearly outlining the potential consequences of underfunding or overfunding. This includes detailing how insufficient premiums can lead to the policy lapsing if the cash value is depleted, and how exceeding minimums can build cash value more rapidly, potentially affecting the death benefit if structured as a corridor death benefit. This approach is correct because it directly addresses the client's inquiry with accurate information about policy mechanics, adhering to the CISR ethical obligation to provide clear and truthful information to clients. It aligns with regulatory expectations that insurance professionals act in the client's best interest by ensuring they understand the implications of their policy choices. An incorrect approach would be to simply state that premiums can be adjusted without detailing the implications. This fails to meet the professional standard of providing comprehensive information, potentially misleading the client into believing they have unlimited flexibility without understanding the risks of policy lapse or unintended cash value growth impacting the death benefit. This could be seen as a failure to act with due diligence and could violate regulations requiring clear and accurate disclosure of policy features and their consequences. Another incorrect approach would be to advise the client to stop paying premiums altogether, assuming the cash value will cover future costs. This is a significant regulatory and ethical failure. It ignores the risk of the cash value being insufficient to cover policy charges, leading to a lapse and loss of coverage. It also fails to consider potential tax implications of policy surrender or lapse, and it directly contradicts the principle of acting in the client's best interest by potentially jeopardizing their insurance protection. A third incorrect approach would be to suggest that any premium amount is acceptable as long as it's above a nominal minimum, without considering the long-term impact on cash value accumulation and policy guarantees. This overlooks the critical interplay between premiums, policy charges, and the policy's ability to remain in force. It demonstrates a lack of understanding of the policy's internal mechanics and a failure to provide advice that supports the client's ongoing insurance needs. The professional decision-making process for similar situations should involve 1. Actively listening to and understanding the client's specific question and underlying needs. 2. Accessing and thoroughly understanding the policy contract's provisions related to premium flexibility, policy charges, cash value, and death benefit options. 3. Explaining the policy's features and their consequences in clear, understandable language, avoiding jargon. 4. Highlighting both the benefits and potential risks associated with any suggested adjustments. 5. Documenting the conversation and advice provided. Question 13. The evaluation methodology shows that a CISR proactive risk identification process for a commercial client should primarily involve which of the following actions to ensure comprehensive coverage and minimize potential losses. Option A. Relying on the insurer's standard risk assessment reports to determine the client's most significant potential exposures. Option B. Conducting a thorough review of the client's current insurance policy to identify any coverage gaps based on the policy's existing terms and conditions. Option C. Engaging in detailed discussions with the client about their business operations, industry changes, and any new ventures or exposures they may have encountered since the last review. Option D. Focusing on updating policy limits to reflect general inflation trends, without specific regard to the client's operational changes. The correct answer is B. Conducting a thorough review of the client's current insurance policy to identify any coverage gaps based on the policy's existing terms and conditions. Explanation. The evaluation methodology shows that identifying and mitigating potential risks is a core responsibility for a certified insurance service representative, CISR. This scenario is professionally challenging because it requires proactive risk assessment and the implementation of preventative measures, rather than simply reacting to claims. CISR must balance the client's needs with the insurer's requirements and regulatory obligations, ensuring that coverage remains adequate and appropriate while minimizing the likelihood of future losses. Careful judgment is required to anticipate potential exposures that might not be immediately obvious. The correct approach involves a comprehensive review of the client's operations and a collaborative discussion to identify potential risks. This includes understanding the client's business, industry trends, and any changes in their operations that could introduce new exposures. By proactively identifying these risks, the CISR can then recommend appropriate risk mitigation strategies, such as recommending specific endorsements, advising on safety protocols, or suggesting changes to operational procedures. This aligns with the ethical duty to act in the client's best interest and the regulatory expectation that insurance professionals provide competent advice. The CISR role is to be a trusted advisor, helping clients understand and manage their risk exposures effectively. An incorrect approach that focuses solely on reviewing the existing policy without considering the client's evolving business operations fails to meet the standard of care. This approach is professionally unacceptable because it is reactive and may leave the client underinsured or exposed to risks not covered by the current policy. It neglects the fundamental principle of ensuring adequate and appropriate coverage based on current circumstances. Another incorrect approach that involves making assumptions about the client's risk tolerance without direct communication is also professionally flawed. This can lead to misaligned coverage recommendations and a failure to adequately address the client's specific needs and concerns. It bypasses essential client consultation and can result in dissatisfaction and potential E&O claims. A further incorrect approach that prioritizes the insurer's ease of administration over the client's actual risk exposures is ethically and professionally unacceptable. The CISR primary duty is to the client, and recommendations must be driven by the client's best interests and risk management needs, not by administrative convenience for the insurer. The professional decision-making process for similar situations should involve a structured approach. 1. Understand the client. Thoroughly learn about the client's business operations and industry. 2. Proactive risk identification. Engage in open dialogue with the client to identify current and potential future risks. 3. Risk assessment and analysis. Evaluate the identified risks in terms of their likelihood and potential impact. 4. Mitigation strategy development. Recommend appropriate risk management techniques and insurance solutions. 5. Client consultation and education. Clearly explain the risks, recommended strategies, and coverage implications to the client. 6. Policy review and adjustment. Ensure the insurance program accurately reflects the identified risks and mitigation strategies. 7. Ongoing monitoring. Periodically review the client's situation and insurance program to adapt to changes. Question 14. System analysis indicates that a certified insurance service representative, CISR, is assisting a client in completing a life insurance application. The client has a history of a medical condition that, while currently well-managed and asymptomatic, is a material fact that the underwriter will consider. The client expresses concern that disclosing this condition might lead to a significantly higher premium or denial of coverage, and asks the CISR if they can simply leave that part blank or mention it briefly without going into detail. The CISR has access to the full application form and understands the importance of accurate disclosure. Which of the following represents the most appropriate course of action for the CISR? Option A. Explain to the client that it is their decision whether to disclose all medical history, and the CISR role is simply to submit the application as the client completes it, regardless of the accuracy of the information provided. Option B. Recommend that the client answer the question generally, stating they are in good health, and then verbally inform the underwriter about the past medical condition during a follow-up call, hoping it will be overlooked. Option C. Advise the client that all questions on the application must be answered truthfully and completely, and that any omission or misrepresentation could have serious consequences, including policy rescission. Then, assist the client in providing accurate and detailed information about the medical condition as requested by the underwriter. Option D. Suggest to the client that they can omit the specific medical history question if they feel it is not currently impacting their health, as the focus should be on their current well-being. The correct answer is C. Advise the client that all questions on the application must be answered truthfully and completely, and that any omission or misrepresentation could have serious consequences, including policy rescission. Then, assist the client in providing accurate and detailed information about the medical condition as requested by the underwriter. Explanation. This scenario presents a common challenge in insurance service, where an agent must balance client needs with underwriting principles and regulatory compliance. The core difficulty lies in accurately assessing risk and ensuring that the information provided to the underwriter is complete and truthful, as misrepresentation can lead to policy rescission or denial of claims. The agent's role is to facilitate the insurance process, not to make underwriting decisions. but they must gather and present information in a way that allows the underwriter to perform their function effectively and ethically. The correct approach involves diligently gathering all requested information from the applicant and submitting it accurately to the underwriter, even if it might negatively impact the applicant's insurability or premium. This upholds the principle of utmost good faith, a cornerstone of insurance contracts, which requires all parties to act honestly and disclose all material facts. Regulatory frameworks, such as those governing producer conduct, mandate truthful and accurate representation of information to insurers. By submitting all information, the agent ensures the underwriter has a complete picture to make an informed decision, thereby protecting both the insurer and the integrity of the insurance market. An incorrect approach would be to selectively omit or downplay information that might lead to a higher premium or denial of coverage. This constitutes misrepresentation, which is a violation of the principle of utmost good faith and can lead to regulatory sanctions, including license suspension or revocation and civil penalties. It also exposes the applicant to the risk of their policy being voided later, leaving them uninsured when they need coverage. Another incorrect approach is to advise the applicant on how to frame their answers to appear less risky, as this also facilitates misrepresentation and undermines the underwriting process. This behavior breaches the agent's fiduciary duty to act in the best interest of their client, while also adhering to legal and ethical standards. Professionals should approach such situations by first understanding the scope of their role as an intermediary. They must gather all necessary information accurately and completely. If an applicant expresses concern about how certain information might affect their application, the professional should explain the underwriting process and the importance of full disclosure, rather than suggesting ways to circumvent it. If the information provided leads to an unfavorable underwriting decision, the professional's duty is to communicate this outcome to the applicant and explore alternative coverage options if available, always within the bounds of ethical and regulatory guidelines. Question 15. Benchmark analysis indicates that a certified insurance service representative, CISR, is advising a client who is moving some of their personal belongings to a small rented storage unit located several miles from their primary residence. The client states that these items are primarily personal effects, not business inventory. Which of the following approaches best reflects the CISR professional responsibility in this situation? Option A. Tell the client that personal property stored in a rental storage unit is not covered by a standard homeowner's policy, and they will need to purchase a separate policy for the contents of the storage unit. Option B. Inform the client that personal property is generally covered under their homeowner's policy, but explain that coverage for property stored in a separate rental unit may be limited and recommend reviewing the policy's specific provisions for off-premises coverage and storage units. Option C. Advise the client that all personal belongings are covered under their homeowner's policy, regardless of location, as long as they are not business inventory. Option D. Assume the client's homeowner's policy will automatically extend full coverage to the storage unit and advise them not to worry about it. The correct answer is C. Advise the client that all personal belongings are covered under their homeowner's policy, regardless of location, as long as they are not business inventory. Explanation. This scenario is professionally challenging because it requires the CISR to accurately interpret policy language regarding covered property, specifically distinguishing between personal property and business property, and understanding the implications of location. A misinterpretation can lead to incorrect advice, potentially leaving the client underinsured or overpaying for coverage they do not need. Careful judgment is required to apply the policy's terms and conditions to the specific facts presented by the client. The correct approach involves carefully reviewing the homeowner's policy's definitions of personal property and property not covered, and considering any endorsements that might modify these definitions. The CISR must then assess whether the described items are primarily for personal use and are located at the insured premises or a secondary residence as defined by the policy. This approach is correct because it adheres to the contractual obligations outlined in the insurance policy, which is the governing document. It aligns with the ethical duty of a CISR to provide accurate and informed advice based on the specific insurance products available and their terms. Regulatory frameworks for insurance professionals emphasize the importance of understanding policy provisions and communicating them clearly to clients to ensure appropriate coverage. An incorrect approach would be to assume that all items within a home are automatically covered under the personal property section of a homeowner's policy. This fails to acknowledge that policies often exclude or limit coverage for business property or property used for business purposes, even if it is located at the insured residence. This can lead to a regulatory failure by misrepresenting policy coverage and an ethical failure by not acting in the client's best interest, potentially exposing them to significant financial loss. Another incorrect approach would be to advise the client that the property is covered without verifying the policy's specific limitations regarding property located away from the primary residence, such as at a seasonal cabin or a rented storage unit. Homeowners' policies typically have limitations for personal property at locations other than the insured premises, and some items might require separate coverage or an endorsement. Failing to investigate these limitations constitutes a regulatory failure by providing incomplete or inaccurate information, and an ethical failure by not ensuring the client understands the scope and limitations of their coverage. A professional decision-making process for similar situations involves a systematic review of the client's stated needs against the available policy provisions. This includes 1. Actively listening to and clarifying the client's description of their property and its use. 2. Consulting the relevant policy documents, paying close attention to definitions, exclusions, and limitations. 3. Identifying any ambiguities or potential coverage gaps. 4. Communicating clearly and accurately to the client the extent of coverage and any potential limitations or recommendations for additional coverage. 5. Documenting the advice provided. Question 16. The monitoring system demonstrates a significant increase in water damage claims reported by policyholders in a specific geographic area following recent severe weather. A policyholder contacts the agency to report damage to their basement due to flooding. The policyholder states, "The water came in through the foundation, and my furniture is ruined." As a CISR, what is the most appropriate initial step to take to address this policyholder's concern? Option A. Advise the policyholder to file a lawsuit against the municipality for inadequate drainage, as this is likely the cause of the flooding. Option B. Immediately inform the policyholder that flood damage is typically excluded from standard homeowners' policies and advise them to contact their flood insurance provider if they have one. Option C. Review the specific policy language for water damage coverage, including any applicable exclusions or endorsements, and consult with the underwriter if clarification is needed before advising the policyholder. Option D. Assure the policyholder that the claim will be covered and initiate the claims process without further investigation. The correct answer is B. Immediately inform the policyholder that flood damage is typically excluded from standard homeowners' policies and advise them to contact their flood insurance provider if they have one. Explanation. Scenario analysis. This scenario presents a professional challenge because it requires balancing the immediate needs of a client with the long-term implications of policy terms and regulatory compliance. The CISR role involves not just processing transactions, but also providing informed guidance, which necessitates a thorough understanding of policy provisions and the ethical duty to represent the insurer's interests fairly while advocating for the client. Misinterpreting or misapplying policy clauses can lead to client dissatisfaction, potential E&O claims, and regulatory scrutiny. Correct approach analysis. The correct approach involves a thorough review of the policy's specific language regarding coverage for water damage, including any exclusions or limitations. This aligns with the CISR responsibility to accurately interpret and communicate policy terms to the client. By consulting the policy and potentially the underwriter for clarification, the CISR ensures that advice provided is factually accurate and compliant with the insurer's contractual obligations and relevant state insurance regulations. This upholds the principle of providing accurate information and managing client expectations based on the contract. Incorrect approach is analysis. One incorrect approach involves immediately promising coverage based on the client's description of the event. This is professionally unacceptable because it bypasses the critical step of verifying coverage against the policy contract. It creates a false expectation for the client and could lead to a coverage denial later, damaging the client relationship and potentially exposing the agency to E&O claims. This approach fails to adhere to the regulatory requirement of providing accurate information about policy benefits and limitations. Another incorrect approach is to dismiss the claim outright without a detailed review of the policy. This is also professionally unacceptable, as it fails to adequately investigate the client's situation against the policy terms. Even if exclusions seem likely, a thorough review is necessary to ensure no part of the damage is covered and to provide the client with a clear, policy-based explanation for any denial. This approach neglects the ethical duty of good faith and fair dealing with the insured. A third incorrect approach is to advise the client to pursue legal action before exhausting internal policy review and claims processes. This is professionally inappropriate because it prematurely escalates the situation and bypasses the established procedures for claim resolution. The CISR role is to facilitate the claims process based on the policy, not to act as legal counsel or to advise on litigation as a first step. This could be seen as exceeding the scope of the CISR authority and responsibilities. Professional reasoning. Professionals should approach such situations by first gathering all relevant facts from the client. Then, they must meticulously review the applicable policy language, paying close attention to coverage grants, definitions, exclusions, and conditions. If ambiguity exists or clarification is needed, consulting with the underwriter or claims department is the appropriate next step. The final communication to the client should be clear, concise, and directly tied to the policy provisions, managing expectations realistically and ethically. Question 17. Consider a scenario where a policyholder is reviewing their personal auto insurance policy and asks their insurance service representative to explain their uninsured motorist coverage. The representative knows that the policy offers both uninsured motorist bodily injury (UMBI) and uninsured motorist property damage coverage, with various limit options available, and that state law mandates specific minimums for UMBI. The representative must provide accurate and compliant information. Which of the following approaches best demonstrates regulatory compliance and professional responsibility? Option A. Explain the difference between uninsured motorist bodily injury and uninsured motorist property damage coverage, detailing the available limit options for each and how they relate to the policyholder's needs, while also confirming the state-mandated minimums. Option B. State that uninsured motorist coverage is included in the policy and will protect them if they are hit by someone without insurance. Option C. Assure the policyholder that their uninsured motorist coverage will cover all damages, including medical bills and vehicle repairs, up to a very high, unspecified amount, regardless of the policy limits. Option D. Advise the policyholder to select the minimum coverage required by the state, as this is the most cost-effective option. Correct answer is A. Explain the difference between uninsured motorist bodily injury and uninsured motorist property damage coverage, detailing the available limit options for each and how they relate to the policyholder's needs, while also confirming the state-mandated minimums. Explanation. This scenario is professionally challenging because it requires the insurance service representative to navigate the complexities of state-specific personal auto insurance regulations and policy provisions, while ensuring accurate and compliant communication with the policyholder. The representative must understand the nuances of uninsured motorist coverage, its variations, and the implications of policy choices. Careful judgment is required to avoid misrepresenting coverage or creating unrealistic expectations. The correct approach involves accurately explaining the uninsured motorist coverage options available under the policy, including the difference between bodily injury and property damage, and the implications of selecting different coverage limits. This approach is right because it adheres to regulatory requirements for clear and accurate disclosure of policy terms and coverage. State insurance regulations mandate that agents and representatives provide truthful and complete information about insurance products. Ethically, this approach prioritizes the policyholder's understanding and informed decision-making, ensuring they select coverage that aligns with their needs and risk tolerance. An incorrect approach that involves simply stating that coverage is included without detailing the specific types and limits fails to meet regulatory disclosure requirements. This can lead to a policyholder believing they have broader coverage than they actually do, creating a gap in protection and potentially leading to disputes. This approach also violates ethical obligations to be transparent and informative. Another incorrect approach, which is to advise the policyholder to select the minimum required coverage without understanding their specific circumstances or risk exposure, is also professionally unacceptable. While technically compliant with minimum state requirements, it fails to act in the policyholder's best interest. This can be seen as a failure to provide adequate advice and could expose the policyholder to significant financial risk if they are involved in an accident with an uninsured driver. This approach neglects the ethical duty of care and the principle of acting in the client's best interest. A third incorrect approach, which is to tell the policyholder that coverage will pay for all damages regardless of the policy limits, is a direct misrepresentation of coverage. This is a serious regulatory violation and an ethical breach. It creates a false sense of security and will inevitably lead to claims disputes and potential legal action against the agent and insurer. The professional decision-making process for similar situations should involve 1. Thoroughly understanding the policy provisions and applicable state regulations regarding personal auto insurance, particularly coverage. 2. Actively listening to the policyholder's needs and concerns to tailor advice. 3. Clearly and accurately explaining all available coverage options, including their benefits, limitations, and costs. 4. Documenting all conversations and advice provided to the policyholder. 5. Seeking clarification from supervisors or underwriting if unsure about any aspect of coverage or regulation. Question 18. The audit findings indicate a pattern of policyholders expressing surprise and dissatisfaction when claims are denied due to specific policy exclusions they were not aware of. As a certified insurance service representative, CISR, what is the most effective approach to address this recurring issue and ensure policyholder comprehension of coverage limitations? Option A. Advise policyholders that it is their sole responsibility to read and understand all terms and conditions within the policy document. Option B. Develop simplified, easy-to-understand summaries of common exclusions and limitations, and proactively discuss these with policyholders during the sales process and at policy renewal. Option C. Focus client discussions primarily on the benefits and coverage provided by the policy, briefly mentioning that exclusions and limitations exist as standard. Option D. Provide policyholders with a comprehensive list of all potential exclusions and limitations at the time of policy issuance, encouraging them to review it thoroughly. The correct answer is D. Provide policyholders with a comprehensive list of all potential exclusions and limitations at the time of policy issuance, encouraging them to review it thoroughly. Explanation. The audit findings indicate a recurring issue with policyholders misunderstanding the scope of their coverage, specifically concerning exclusions and limitations. This scenario is professionally challenging because it directly impacts customer satisfaction, regulatory compliance, and the insurer's financial stability. Misunderstandings can lead to claims being denied unexpectedly, resulting in customer disputes, potential regulatory complaints, and reputational damage. CISR professionals are expected to bridge the gap between complex policy language and the policyholder's comprehension, ensuring clarity and managing expectations. The correct approach involves proactively educating policyholders about policy exclusions and limitations during the sales and renewal processes. This includes clearly explaining what is not covered, the conditions under which coverage might be limited, and providing accessible resources for further clarification. This approach aligns with the ethical duty of a CISR professional to act in the best interest of the client and to ensure they have a clear understanding of their insurance contract. Regulatory frameworks, such as those governing fair practices and consumer protection, implicitly require insurers and their representatives to provide clear and understandable information about policy terms, including exclusions and limitations, to prevent deceptive practices and ensure informed consent. An incorrect approach would be to simply rely on the policy document itself as the sole source of information for the policyholder. This fails to acknowledge the complexity of insurance contracts and the varying levels of insurance literacy among consumers. Ethically, it represents a dereliction of duty to ensure comprehension. From a regulatory standpoint, this passive approach could be construed as a failure to adequately disclose material information, potentially violating consumer protection laws that mandate clarity and transparency. Another incorrect approach is to downplay or gloss over exclusions and limitations during client interactions, focusing only on the benefits of the coverage. This is deceptive and unethical, as it misrepresents the scope of protection. It also creates a significant risk of future disputes and regulatory scrutiny for misrepresentation or deceptive sales practices. A third incorrect approach is to assume that all policyholders will independently seek clarification on exclusions and limitations. While some may do so, many will not, leading to the very misunderstandings the audit highlights. This passive stance abdicates the responsibility of the CISR professional to facilitate understanding and manage client expectations effectively, which is a core component of professional service in the insurance industry. The professional reasoning process for handling such situations should involve a commitment to clear and transparent communication. This means actively reviewing policy documents for potential areas of confusion, developing simplified explanations for complex terms, and dedicating time during client interactions to discuss exclusions and limitations. Professionals should also be prepared to answer follow-up questions and direct clients to appropriate resources. This proactive and client-centric approach not only mitigates risks, but also builds trust and strengthens the client relationship. Question 19. Benchmark analysis indicates that a certified insurance service representative, CISR, is tasked with researching the latest state-specific regulation regarding disclosure requirements for variable annuities. Which online resource utilization strategy would best ensure accurate and compliant advice? Option A. Focusing research efforts on competitor insurance company websites to understand their disclosure formats. Option B. Relying on general internet search engine results and insurance industry blogs for a broad overview of disclosure practices. Option C. Reviewing online insurance forums and discussion boards to gather anecdotal evidence from other agents. Option D. Primarily consulting the state's Department of Insurance website and official legislative databases for the most current statutes and bulletins. Correct answer is D. Primarily consulting the state's Department of Insurance website and official legislative databases for the most current statutes and bulletins. Explanation. This scenario presents a common challenge for insurance service representatives, efficiently and accurately gathering information to advise clients effectively. The professional challenge lies in balancing the speed and accessibility of online resources with the need for accuracy, reliability, and compliance with regulatory standards. Misinterpreting or misapplying information found online can lead to incorrect advice, client dissatisfaction, and potential regulatory violations. Careful judgment is required to discern credible sources from unreliable ones, and to ensure that the information gathered is relevant and applicable to the specific client's situation and the applicable regulatory framework. The correct approach involves utilizing a multifaceted research strategy that prioritizes official and regulatory sources. This approach is best professional practice because it directly addresses the need for accuracy and compliance. By consulting state insurance department websites, official legislative databases, and reputable industry associations, representatives can access the most current and authoritative information. This ensures that advice provided is grounded in the specific laws and regulations governing insurance in their jurisdiction, thereby protecting both the client and the representative from potential liabilities. Ethical practice mandates providing advice based on verified information, and regulatory compliance requires adherence to the laws of the jurisdiction. An incorrect approach that relies solely on general internet searches or forums is professionally unacceptable. This failure stems from a lack of due diligence in verifying information. General search engines can return outdated, inaccurate, or jurisdictionally irrelevant information. Forums, while potentially offering insights, are not official sources and can contain opinions or anecdotal evidence that does not reflect legal requirements. Relying on such sources constitutes a regulatory failure because it risks providing advice that contravenes established laws and guidelines. Ethically, it is a failure to uphold the duty of competence and care owed to the client. Another incorrect approach that focuses exclusively on competitor websites for product information is also professionally flawed. While understanding competitor offerings is part of market awareness, it is not a substitute for understanding the regulatory landscape. Competitor websites may highlight features without fully disclosing regulatory limitations or requirements. This approach can lead to misrepresenting product capabilities or failing to inform clients of crucial regulatory aspects, creating a regulatory and ethical risk. The professional reasoning process for similar situations should involve a hierarchical approach to information gathering. Begin with official regulatory bodies, state insurance departments, legislative sites, for the most authoritative information. Supplement this with reputable industry associations and established insurance publications. Only then, with a solid foundation of verified information, should one consider broader searches or competitor analysis, always cross-referencing findings with the primary, official sources. This systematic approach ensures that advice is accurate, compliant, and ethically sound. Question 20. Process analysis reveals that a client is inquiring about adding their 23-year-old son to their health insurance policy. The son is currently enrolled full-time in college and is financially dependent on the client. The CISR professional needs to determine if this son qualifies as a dependent child for coverage purposes. Which of the following actions best reflects the required professional approach? Option A. Inform the client that a 23-year-old is generally too old to be considered a dependent child on an insurance policy, regardless of their student or financial status. Option B. Advise the client that since the son is a full-time college student and financially dependent, he will automatically qualify as a dependent child for insurance coverage. Option C. Assume that the definition of dependent child used by the client's employer for their own benefits package will apply to the health insurance policy. Option D. Review the specific insurance policy contract and applicable state insurance regulations to ascertain the precise definition of dependent child, as it pertains to eligibility for coverage under that policy. The correct answer is D. Review the specific insurance policy contract and applicable state insurance regulations to ascertain the precise definition of dependent child, as it pertains to eligibility for coverage under that policy. Explanation. This scenario presents a professional challenge because it requires a CISR professional to accurately interpret and apply the definition of a dependent child, as it pertains to an insurance policy, specifically in the context of eligibility for coverage. Misinterpreting this definition can lead to incorrect advice, potentially leaving a client's family without necessary coverage or causing them to pay for coverage they are not entitled to. The CISR role demands a precise understanding of policy terms and their regulatory underpinnings. The correct approach involves consulting the specific insurance policy contract and relevant state insurance regulations to determine the precise definition of a dependent child. This definition will typically outline age limits, student status requirements, and other conditions that must be met. Adhering to these defined terms ensures that advice provided is accurate, compliant with policy provisions, and aligned with regulatory expectations for fair claims handling and policy administration. This upholds the CISR ethical duty to act in the client's best interest and maintain professional integrity. An incorrect approach would be to rely on a general understanding of what constitutes a dependent child in everyday life, without referencing the policy's specific language. This fails to acknowledge that insurance contracts have precise, legally binding definitions that may differ from common usage. Such an approach risks misrepresenting policy terms and can lead to coverage disputes or denial of claims, violating the CISR obligation to provide accurate information. Another incorrect approach is to assume that the definition used by another insurance company or in a different policy type would apply. Each insurance policy is a unique contract, and definitions can vary significantly between insurers and policy forms. Making such assumptions bypasses the critical step of verifying the definition within the specific policy in question, leading to potential inaccuracies and a failure to meet professional standards. Finally, an incorrect approach would be to provide advice based solely on the client's verbal assertion of dependency, without verifying the details against the policy and applicable regulations. While client statements are important, the CISR has a responsibility to confirm that these statements align with the contractual and regulatory requirements for coverage eligibility. Relying solely on verbal assurances without verification is a failure to perform due diligence and can result in incorrect advice. The professional decision-making process for similar situations should always begin with identifying the core issue, e.g., eligibility for coverage. Next, the professional must locate and meticulously review the relevant policy documents and any applicable state insurance laws or regulations that define the terms in question. If ambiguity exists, seeking clarification from the underwriting department or a supervisor is a prudent step. The final advice or action taken must be directly supported by the policy language and regulatory framework.